PayPal just reported earnings now in the after hours, and the stock is pretty much flat, and their earnings were actually not bad. So I decided to do a pretty quick video to actually, review their earnings and talk about my valuation model, update my fair value for us to determine a pretty good buy point for us to double our money on PayPal. And I also know I have a lot of subscribers on the channel that are PayPal shareholders, as I have made 2 or 3 videos before on PayPal. And again, you guys like them, so I decided to do one today. And again, the chart is pretty ugly. It's down over 70% from its peak of $300 per share, and now it's sitting around, $78 per share. Now, there's something pretty interesting about PayPal, that it's pretty much an inflection point, and we can see a lot of improvements since Q1 of 2022, where their EPS touched 88 cents per share, and then it started going up to 93 cents, $1.08, now it's $1.24. So this is a pretty good improvement from PayPal, and if the momentum continues, this is very good news. Something else that I really liked from PayPal, and this is something I was concerned about before, and I did say that this is pretty concerning, and this is the GAAP and the non-GAAP operating margins. I was seeing a steady decline, and I said if this continues, this is really bad for the company. But again, we have seen an inflection point in the GAAP and the non-GAAP. They troughed in Q2 of 2022, and they have been steadily, expanding and getting much better, which is again something else that's pretty good, for PayPal. Looking at what they did with their capital allocation, this is what you want to see from the management. Most companies, they buy back stock at pretty all-time high type of prices, and then when the stock goes down, they don't have any cash left to actually, buy back stock. But again, PayPal did the exact opposite. In 2020, 2021, when their stock was doing well, they didn't put a lot of money on buybacks. Most of their money actually went to acquisitions and strategic investments and, some CapEx and a couple of other things. But in 2022, because, the chart looks this ugly, and we can argue if it's actually undervalued or not, but PayPal actually put pretty much 75 to 80%, I believe, of their free cash flow into buying back stock. It's around 80% of free cash flow. So again, this is pretty good decisions from the management, not to buy high and sell low. It's to buy low and sell high. So again, they do get it, and it's well. And we look at their, shares outstanding. They have been going down, and this is something you have to look at with those type of tech stocks, because many of them say we're buying, $10 billion worth of shares, but then the shares themselves are not going down because of high stock-based compensation expense. So you actually have to look and see if the shares outstanding are actually coming down, because sometimes they could be buying back a lot of stocks, but the shares outstanding actually going up, meaning pretty much no value for you, as a shareholder. Now, this is the worst part about this whole thing, and something that I didn't like with PayPal. They reported their guidance for 2023. Now, their GAAP EPS is $3.27. So if we take their GAAP EPS, and now it's roughly trading around $80 per share, so we take 80, and when we divide it by, $3.27 per share, and then we get around 24.5 times earnings. So that's very expensive for a company that's growing, 8 to 10% per year. It's pretty expensive. But again, the main argument is that this is just the GAAP EPS, but the non-GAAP EPS is actually $4.87. Now, the main reason for the big difference between the GAAP and the non-GAAP is because the GAAP includes $100 million of restructuring surcharge from the global workforce reduction that they made. They fired some people, they did a lot of things, they had to incur some charges around $100 million, and they initiated that in January of 2023. So the EPS might be a little bit lower again for 2023 because of this whole thing. But if you don't want to include this whole thing and you want to look forward to 2024 or whatever, you could take the $80 and divide it by the non-GAAP EPS of $4.87, then you get 16.5 times earnings. And to me, this is a much better metric to value PayPal. So again, I normally like using GAAP earnings, but this time if you want to use non-GAAP earnings, you can actually get a better picture, because this charge is not going to be included in 2024 or 2025. This is just a one time expense. And again, you look at absolute metrics, PayPal is trading around 16.5 times earnings, which is again not bad in my personal opinion. They have the CEO. He said he's announced his retirement. And he's going to leave the company by the end of the year, December 31st, 2023. He's going to work with the board on his smooth, transition and all that type of stuff. I don't know if they have someone in place yet, but I believe from now till the end of the year, they can get someone in place. And I don't think this is a big concern. Now, the most important part of my video is actually the valuation model for us to determine if PayPal is a buy or not. Now, looking at my revenue, I put in 27.5 billion because this is the current revenue for 2022. 2023, they are guiding 9% revenue growth. So I left the same 9% from now till 2027. Now, before, PayPal used to grow around 20%, 18%, 15%, 20%, 18%, and then in 2022 it dropped down to 8%, and they are guiding around 9.5% for 2023. Now we can argue that maybe PayPal can get back to 12 to 15%, but from all the competitions that there is with Square and many other companies, I would personally not bet on PayPal actually getting back to 15%. Although it's possible, but whenever I want to make this investment, I want to try to take the worst case scenario. And the worst case scenario maybe could be 5 to 6%. But again, 9%, I believe is something that could potentially be, sustainable. We get pretty close to $7.2 billion of net income by 2027 using a 20 PE ratio, which again could be a little bit expensive. We're going to use a little bit different scenarios. But if PayPal is growing, at 9 to 10% every single year and has 17% net income margin, I believe somewhere between 15 to 20 PE ratio is a pretty fair number. And we're going to use both, scenarios. And I personally believe 20% is more on the fair side for PayPal just because their net income margin is actually pretty good. Now, using a 20 PE ratio, we get $143 billion market cap 5 years from now, which is around a 70% on the upside. I used a dividend. This is not a dividend, this is a buyback. So assuming they buy back 2% of their stock every single year, maybe they can buy a little bit more, but 2% is fair. So with this entire number, it's around a 12% compounded every single year for the next 5 years. Now, to me personally, this is pretty expensive for the company, and I don't believe it's a buy at such prices. And if I used a 15 PE instead of 20, this is only 30% on the upside. But again, because PayPal is a growth company, it has higher net income margin, I believe 20 PE is more than fair for the company. It could even maybe trade a little bit higher. But using those same metrics, if I want to double my money over the next 5 years with PayPal, I have to buy it around 64, 65, dollars per share, which would be pretty close, to whatever it was trading before. Before it traded as low as around $6 to $8 per share on its 52-week low, and it had pretty much a double bottom, which is even lower than what it was trading at pre-COVID. But PayPal at such prices, for me, again, is not a buy. I'm not a big fan of the business model. I don't know 10, 15 years from now, what's going to happen with tech and what's going to change with this whole thing. So again, it's not bad if you want a 10 to 12% compound every single year. It's not bad at all. But for me personally, again, betting on a pretty base case scenario, betting on 9% sustained, not 15% growth, betting on 20 PE, not 25 PE, playing it a little bit safe. Again, the stock is still not a buy. And if PayPal does get to $60, $65, then I can make another video and make sure all the numbers align and let you guys know if it's, it could be a buy at those prices or not. So this was my video on PayPal. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.